Hello, everybody, and sorry about the delay. Truly sorry about that. We have two internet companies here, and we had a problem with the internet. How ironic. So as people are filing in, I want to give people some time to file in. Will make their way. As we always start this presentation, where are you dialing in from? Perhaps even what do you want to learn from this webinar today? Just throw it into the chat box and we'll respond accordingly. Kevin, why don't you go ahead and introduce yourself in the meantime?
Sure. Thanks, Chad. Happy to be here. My name is Kevin Weeks. I am also calling from New York, just like Chad. I work at Payability. Payability, you may have heard of Payability. It's a financial services provider for Amazon sellers and hopefully soon other marketplace sellers as well. I'm our Director of Partnerships and Business Development, which can mean a lot of different things, but today that means I'm on a webinar with you guys.
And then go into your marketing background a little bit, if you don't mind. Yeah,
sure. So there's a couple different steps along the way that led me into a business development role at a financial services startup. So I started my career actually on Wall Street. I worked at Bank of America Merrill Lynch for a good 5.5 years. And then when I went to school and post-business school, I ran a marketing agency, a digital marketing agency for about 2.5 years. And that's actually where I initially met Payability, was working with them in a consulting basis and started. It's a really interesting business. They're a really, really cool company. I love the people here. And that's, the rest of this history. So I get to combine sort of my finance background, my sort of startup marketing background, and yeah. So honestly, any questions about digital marketing too, I can probably be a resource if they come up on this webinar today.
Awesome. Thank you for sharing. We've had some fun comments come in already from Ryan. Appreciate it. So Kevin, you're still coming up a little bit choppy, and I'm wondering if we could just speakerphone you in. We mute your line and you speakerphone in. Yeah, it's coming across super choppy. I'm going to call you right now. Yes, much better. So did you mute right now? Right now your video is muted, or your video is frozen. And did you mute your line?
I muted my line, and I see myself on the video still.
Yeah, you're frozen.
Myself, but that's fine.
You're in a funny frozen position.
Let's turn it off then, jeez.
Still frozen. Hopefully the audience can screen capture you and see you in that position. It'll go viral.
The picture that's on the screen now, like the headshot that I sent you, is better anyway. That's a much better photo.
All right, so hopefully everyone can hear Kevin, who's joining us on speakerphone because of the technical difficulties. Yep, James just wrote in saying that your sound wasn't great. Guys, can you hear Kevin right now? Give me a booyah or a hell yes.
Well, I guess right now was relative. What about right now while I'm talking?
Yeah, I'm saying right now. Can you guys hear Kevin? Hold on, let me chat the group here.
Yeah, Chad, I can hear myself in my headset as I'm talking to you through the speakerphone. You're a little louder than I am, obviously, because I'm coming through your speakerphone, but I think it's not.
Okay.
There's no connection problem. It might just be a volume issue where I'm a little quieter than you are. So I'll speak up.
Okay, great. Yeah, James just wrote in. That's much better. So let's make this webinar happen.
Cool. Sounds good.
So today's webinar is about taking control of your cash flow, optimizing your inventory to maximize profits. Kevin shared his background briefly. My background is I'm a top 500 seller on Amazon. Started Skubana, which is a software business, to run and automate my entire business, both on Amazon and on the other 18 channels that I sell on. Enough about me. Let's get into how we can make more money.
Sounds good.
All right, so let's go through. Actually, Kevin, why don't you walk everyone through what we're going to go through today?
Yeah, sure. It sounds like a plan. So a couple sort of high-level bullet points here. The main thing we want to start with is why you guys care about Amazon. Obviously, you know that Amazon is important, and if you're on this webinar, you are, probably an Amazon seller, and you appreciate that it's a huge distribution channel, but there's some stats we wanted to share about why it's so important. Secondly, as we get into the meat of the presentation, a couple of frameworks, one from Chad and one from me, that we both think are super helpful, just to kind of keep yourself honest and accountable for what you're trying to accomplish as an Amazon seller, especially as it pertains to cash. And then the last one is a couple metrics that top Amazon sellers use to really hold themselves accountable to those goals. So things you can look at either in Seller Central if you dig hard enough, or in softwares like Skubana, to actually find out your performance on a unit by unit basis, item by item basis. So that's kind of the outline today. And Chad, unless you have anything to
No, that was perfect.
Yeah, let's just jump in.
Yeah, that was perfect. So these are some stats that we were pointing to just to frame the conversation. Essentially, Amazon is a beast. You don't want to mess with them, right? 51% of all the growth that happened in the last fourth quarter was attributed to Amazon. And 80% of all product searches start on Amazon and never go anywhere else. So essentially, if you're not on Amazon, you're losing market share, but also there's a ton of market share to happen off Amazon.
Yeah, but another thing that we thought is interesting, and we heard this from a bunch of our customers, is that Prime Day this year took a lot of people by surprise. Everyone expected Prime Day to be huge because Prime Day is, basically a manufactured holiday for Amazon to get you guys sales. And in 2017, there was 60% pop from 2016, which is insane. And that's good. You did more sales, but we also heard from many of our customers, Prime Day cleaned me out. I stocked out the day after Prime Day, and then, I had to deal with that. So it's something to pay attention to, because there's probably some lessons there from Prime Day that you can apply to Q4.
And totally. And the last point here is that most people think there's about 2 million sellers on Amazon. There's actually 5 million third-party sellers. Those 5 million sellers contribute nearly 100% of Amazon's e-commerce profit and consume about 95% of Amazon's entire catalog. But just this year alone, where I thought that Amazon was tapped out of third-party sellers, they're clearly not. Amazon added 500,000 new sellers this year alone, which is crazy.
It's insane. It's insane. The amount of growth is interesting, and I think in the media you'll hear that with a positive spin. Wow, Amazon's growing, Amazon's growing. I think for you guys, it's important to realize that means competition. Don't want to, throw a wet blanket on the first four stats, which means, which imply there's a big tailwind for you as a seller. But the fifth bullet here is like, there's a tailwind, but everyone knows about it, so it's competitive. So I think it's important to keep in mind that this isn't the gold rush like it was a couple years ago. It's competitive, and it's getting more and more competitive every day.
I just had a seller tell me yesterday, they said, my grandmother asked me how I should be selling on Amazon. When your grandmother asks you how you should be selling on Amazon, you know that there's a red flag and things aren't the way they used to be. So this is something that I wanted to share with everybody. So when I first started selling in Amazon in 2007 and 2008, I had a massive window of opportunity where the products that I came out with were not copied in seconds or weeks or months. Like literally it took people years to figure out the private labeling strategy or the building the brand strategy. And it's interesting that this death cycle that we show you today has really condensed to the point of essentially you introduce a product and you have a 3 to 6 month window to experience growth until somebody either rips you off, copies you, or even just hijacks your listing. So for the framework of what we're going to be discussing today is that you want to be able to spot when you're in the introduction phase and the growth phase, but when your product actually hits the maturity phase. Because at that point, you don't want to double down on that SKU because you're going to start phasing that SKU out.
Yeah, it's a good point. And Chad, I was looking at this yesterday when we were sort of running through this a little bit, and the key here is when you put this together initially, you put annual sales volume on the left axis. And like even that is a misnomer these days. To your point, you have a couple months to figure this stuff out. So that's more like, you know, annual is a bit misleading. Like to expect to have a ton of sustainable success over the course of a year is actually, you know, potentially a misnomer nowadays as it gets more and more competitive. And I think to your point, the other big takeaway here is that these dotted lines, these vertical dotted lines, those are getting closer together every day. So your window to actually be the sort of go-to provider of something during the introduction phase goes from months to weeks, and it's only getting shorter because of this sort of competition tailwind. So, but I think this is a great way to look at it, and you really need to be honest with yourself about where on this curve you lie on a SKU by SKU basis.
And I think it's partially art and partially science, right? So partially it's like, okay, knowing when you're going to hit maturity, but you don't actually, there's no facts or no data that's going to give you that outside of like sales velocity. But then you can start looking and seeing what new competitors are sort of popping up with the same keywords that you have that are now taking away share of what you've built.
Yeah, it's a good point. There is a fair amount of running an Amazon business is to look at the data that everyone else has and make a gut decision on where you think the future is, right? So that's sort of the special sauce of running these businesses, is really understanding the inputs and making, you know, educated decisions about the future.
And like if the iPhone invented the touchscreen phone, and if Apple just sat on their laurels and didn't do anything, they knew exactly that they were going to be copied within 6 months with an Android or an HTC phone. So what do? They came out with the iPhone 2 and the 3 and the 4. So you constantly have to be thinking in your head, especially the seller in e-commerce where it's extremely fast moving, is where's the puck going? And go to where the puck is going, not to where the puck is.
Yeah, I love that. I'm a former athlete now, so I love these sports analogies.
So why don't you jump off the selection process of just looking at the portfolio itself of your SKUs?
Yeah, sure. Thanks for teeing this one up. So again, another framework to really like help you look at the mirror and think about what SKUs you have and what categories you're in. So this is a matrix from Boston Consulting Group, BCG. It's called the Growth Share Matrix, and I think I know, you know, Fortune 500 CEOs use this as a quick way to think about their markets, and it's something that Amazon sellers and frankly any business should be paying attention to. It's really about who you are and where you are today and what you can expect in the future. So the way you think about it, on the left side there is market growth rate. So in this case, you know, is there a new technology? Is there a new type of product that we expect to be growing in the future or not? And then on the bottom axis, there's the relative market share that you yourself have. So are you competing against a million other sellers? Are you competing against 5 other sellers? Or is this a private label brand that you own yourself? It's really important to pay attention to. So we can dive into it, and I'll give you some examples just to flesh this out, because I know these matrices can be a little mind-numbing. So let's start with cash cows on the bottom right here. So you have a high market share and a low market growth rate. So this is maybe something like a consumer staple that you are ungated in a particular brand, or something we talked about yesterday, like a granite cleaner. Like you are one of, you know, 5 sellers that actually sells this product that a certain number of people need, and if you have it, they'll buy it when they need it. There's not a ton of growth, but since you are the supplier of it, people go to you, and you can sort of rely on consistent sales, and that's not going anywhere.
It's kind of like
not necessarily good or bad, but it's important to know your identity if that's who you are, and maybe, you know, don't freak out heading into Q4 like people selling toys and games, or don't stock up your shelves on Prime Day because Prime Day is not relevant to a granite cleaner. So just stuff like that about how you manage your business and what, you know, market signals to pay attention to and what not to. As we move up, I think this is pretty interesting. The stars. So this is high relative market share and high growth rate. I think a great example of this, and there's a million examples of this, but successful private labelers who have built their brand on Amazon. So Cards Against Humanity jumps out as a great example. They own the market because it is their company and they built a brand, and there was a ton of growth there because it was an awesome idea and people loved it. We here, Chad, I'm curious to hear what your thoughts are on this, but we at Payability, we have a couple thousand customers here. We hear that a lot of folks are looking, I guess this is fairly obvious, but are looking to build a business so that they can then start trying to private label and start trying to build their own brand because they believe that that's going to be defensible in the long run.
Yeah, I think that that's the wave of the future because the access to finding suppliers has gotten easier. The world has gotten flattened, and we see a lot of that too. A lot of the companies that are on Skubana are really just either reselling, or they're reselling and they're private labeling, or they're building a brand and they're just private label. But going back to cash cows, I was going to say, like, to me, that's like the shaving blade market, right? There's only 5 different shaving blades out there. The growth rate is sort of mature, right? Like the same people are going to be shaving, right? It's not, the population isn't like exponentially growing. And the relative market share is high between those 5 people, right? There's not a lot of alternative options.
Right. Yeah, it's a good example. And then we can go through these other 2 as well. So dogs, I think, is an important one because I think there are a lot of Amazon sellers who do a lot of top line revenue, but maybe don't see a ton of profit coming out of it. And that could be because you're in this dog bucket, which is, imagine you're selling just like a commodity. You're selling envelopes or, manila folders or toilet paper holders. There's a million, there's a million other sellers selling them. There's not a ton of differentiation between the product. So then it's just a matter of sort of who Amazon feels like giving a buy box to. And Chad, you know more about buy box than I do, but it's a tough spot to be in because it can feel like fool's gold if the whole market is raising. So for example, if you're selling a dog on Prime Day, you're going to sell stuff on Prime Day because it's Prime Day, but you need to think about how you're doing relative to your competitors. So it's important to be honest with yourself there. And then the other sort of potential trap, but also a potential huge upside is what we call fads here, which may have a negative connotation. This is when you have a low market share of something. There's a lot of people trying to sell it, but there's a ton of growth rate behind it. So fidget spinners or
hoverboards
from a couple of years ago, those sort of petered out, but there are things that people were able to take from the fad bucket and move into the high relative market share start bucket. For example, the iPhone, the name's escaping me, but the iPhone case company that put the batteries on the case, like that's a super competitive market, and they were able to build a brand around themselves. Ironically enough, I can't think of the brand right now, but it is possible to move within these buckets if you have a sound strategy.
Yeah, and the last point that I would just say is that a lot of times you can have a star and it moves to a fad. So I'm sure the first person that came out with the fidget spinner killed it on Amazon, and now it actually, everyone copied it and moved into the fad space.
Yeah, it's a good point. And that speaks to your previous slide about the death cycle. It's sort of like the bucket that you're in just depends on how long and protracted the death cycle is.
Cool.
Got a pretty simple slide here. I'll kick off and you can jump in. So
sure.
The idea here is cash is inventory and inventory is cash. So if you're an Amazon seller, the only way to have product is to have cash to buy that product. And the only way to make cash is to have inventory listed on Amazon. And the cycle continues. It's important to note this because that's not exactly how other businesses work. So for example, Apple, right? Apple has a ton of cash on their balance sheet, and that's viewed as a war chest so that maybe they'll go out and buy a new technology company for their new products, or maybe they'll use that money to dividend to shareholders. Or there's other uses of cash in other businesses. In an Amazon business, you're just fueling the fire. You're feeding the beast. And so the faster you can move cash to inventory and inventory back to cash and vice versa, the better. That's we say this a lot here at Payability, but just feed the beast. Like if you don't want to feed the beast, then take the money out of the business and buy yourself something nice. But you shouldn't have cash sitting in your business doing nothing for you, because that is the fuel for this engine that you've built.
Yep. Totally agree. You need to keep innovating. So we'll go through some inventory metrics that you can do to just understand your business, because if your inventory is cash and cash is your inventory, then you need to understand what's happening with that cash that's sitting in your business and see maybe if there's some efficiencies that you can gain from that, from analyzing your business. So these are some talking points we'll go through together. And the first one, it sounds like it's an easy one, but you'd be surprised how many people don't know this, is what is the inventory that you have sitting at Amazon FBA? What is the inventory that's sitting at Amazon and sitting in your own warehouse? And do you have that quickly at your fingertips to see what that inventory value is?
Yeah, this is a funny one. You say that people don't know that off the top of their head. At first glance, you think that you know it, and then if you actually dig down, you might not. It reminds me of like credit card points or miles or PayPal balance that you're not using, except it's way more costly to have inventory sitting at FBA and not doing work for you, versus credit card miles. All they can do for you is, go buy a flight or something. Here, like we talked about on the previous slide, if you have inventory that's not moving, that is cash that you are not making. Like, there's a huge opportunity cost to having inventory sitting there, and I think this is something to really hold yourself accountable to, is where is your money parked at any given time?
Mm-hmm. And the other piece, of course, that we can talk about is the fact that Amazon charges a longer-term storage fee in the fourth quarter, which is coming right up, and it gets to be extremely expensive to have. They essentially disreward you from having items sitting in their warehouse. And that's how they disincentivize you from doing that, is essentially charging you a lot more money for that inventory to sit there.
Right, and then there's the biannual, like where they hit you with another fee, right? So it gets more expensive in Q4, but then they also hit you with a longer-term storage fee in February and I think August. And it's exactly to that point. It's to make sure that they're making money for you being lazy with your inventory, which is a brutal way to look at it, but it's true.
Yeah. The last thing I wanted to just mention.
If you're not making money on Amazon.
The last thing that you should mention, especially if you're doing your financials for this month or even for the end of the year, is like, what is the inventory that's sitting at Amazon? What's the inventory that's in transit, the dollar value that's in transit going to Amazon, and what's the inventory value that's in transit coming from your manufacturers or from your vendors? And all of that affects your profitability at the end of the day.
Yeah, that's something that we hear a lot. I don't need to plug Payability here, but that's one of the use cases for Payability customers, is to shorten that amount of time between when you know you need to place an order and when it turns into inventory, by getting ahead of these cash crunches and placing orders earlier, so that there's sort of less of a percentage in transit at any given time. But we can talk about that later.
So the next piece is, what percentage of your catalog did or did you not sell in the past 30 days? And these are important forensic numbers to really dig deep and understand what's happening in your business. You want to know what percent of your catalog this past month or even in the past week has not sold. And then what are you going to do about that? How do you identify them? What do you do about that to make sure that you either maybe run a sponsored ad, do a lightning deal, do a Facebook ad on that product, depending on what you'd like to do with it. But there's various different strategies you can do. But the first thing is just understanding the fundamentals, that you have cash that hasn't sold. What are you going to do about it?
I think it's also important here to make sure that you're doing, to use your terminology, Chad, the forensics of unit by unit, SKU by SKU, what is happening. It's very tempting to look at aggregate numbers, either for the whole business or by category or by some other, what's in a certain warehouse at FBA. But you really need to understand what's moving and what's not on a unit level in order to make the most profitable decision for your business, because your business is just the aggregate of all those unit margins. I think we'll talk about that on the next slide, but it's something that we hear about a lot, where people have like sort of personal goals. They say, I want to make 50K a month, I want to make 100K a month. Like, okay, that's an aggregate top line number. We need to actually really dig into that to understand the components of that, to understand if that's a sustainable place for you to be.
I just turned it off. I turned it back to that screen.
And I think, in terms of that, so in terms of what did or did not sell in the past 30 days,
Awesome. I'm just resharing our screen here.
Okay.
It's not up yet. One more second. Right here. Share screen.
That's a good-looking screen, Chad. It's a couple of headshots. I'm not sure who the one on the right is, but but yeah, this stuff. While you're doing that, I'll just plug Skubana here. Why not? That's the stuff that we're talking about is these metrics on a unit-by-unit basis, on a forensic basis. This is exactly what this company helps you do, is give you clarity all the way down to the, and granularity all the way down to the item, so that you can make the best decision on an item-by-item basis. Because again, that's the nature of this business. You have inventory, and you need to sell that inventory. So making sure that you are cognizant of every component of that is how you're going to differentiate in the super competitive market.
Kevin, you are hired at Skubana. So, one of the things that we do, and you should be doing this, if you don't have Skubana, you should be doing this on your own. Figuring out with every single fee, and let's just focus on Amazon for a second, is your pick fee, your pack fee, your storage fee, your long-term fee, your return fee. Oh, is my microphone? It says no sound. Turn microphone. Okay. So turn.
Yeah, I'm on speakerphone, so I can hear you.
Got it. Okay. Cool. So you want to look at every single fee in your Amazon FBA. Your pick fee, your pack fee, your storage fee, your long-term fee, your return fee, even your sponsored ad costs. You literally need to get down to the dollar of how much you're making, including your cost of goods sold and where your money is going. So that's something that
I can hear you, because I'm plugged in here and I see a black screen and no sound coming from.
No sound.
Yeah.
Okay, that's fun.
Well, Kevin with an A says he can hear you. And he said no sound.
We can hear. So Kevin can hear is saying you can hear.
Okay.
All right.
Cool. Other Kevin, thanks for clarifying. Appreciate it.
So, but either way, Luke's saying no sound now. So that's a lot of fun.
Let's see.
There is a little bit of a delay with Webinar Jam, so it should be okay. Yeah, Luke is saying he can hear now. Okay, so really what we were saying is your pick fee, your pack fee, your storage fee, your long-term fee, your cost of the goods sold, your sponsored ad cost. Know how much you're making on Amazon and off Amazon with every single fee. One of the things that we did internally in my own company, because I would go places and everybody would say, Chad, what's your A cost, right? What is your average cost of the sale for sponsored ads? And I really got fed up with that question, because essentially not all sponsored ads are created equally.
Yeah.
So what we did was we exported this report where we're making the most of our money. And I think this rings true with everybody. 20% of your SKUs generates 80% of your profits. Take a look at that 80-20 rule in your own business and double down on the SKUs that are making you the most money, so that you don't have to abide by a waxing A cost, but throw that A cost, that's a broad A cost, out the window. Get to it on a specific product level or a specific category level if you want to get that granular.
Yeah, that's something that rings true when I was running digital marketing agency as well. So this is something, we use terms like A cost and we use terms like FBA, but again, this is true for any business really, and any, especially e-commerce businesses. It's the power of the internet, the power of the e-commerce landscape is that you can get hyper-targeted and you can serve super niche markets at a couple clicks of a button. So as a result, generalized how much should I spend on advertising questions are irrelevant, right? If there's a super niche product that a ton of people are going to want, if you can find them, then maybe you should spend more advertising to find those people, because then you'll be more profitable. That sort of principle holds true on Amazon as well. So I couldn't agree more on that one.
Cool. Glad we concur here.
And there's another thing to throw in here on the cost structure. Well, just while we're talking about cost structure, because Payability, my company, we're not free. We charge a fee for our service, and I sit a couple feet away from my sales team, and one of the things that they talk about fairly often with prospective customers is why you should pay the fee to Payability to get your money faster than Amazon normally pays you. So that's just for your reference, that's what we do. We get you daily payouts instead of biweekly payouts on Amazon. And so we charge a fee for that, and we encourage folks to really understand if they can make their business grow much faster if they have their money today instead of 2 weeks from now. If they can't, then that fee isn't worth it, and maybe they shouldn't consider Payability. So it kind of goes down to really understanding all these levers in your business, exactly what you were just talking about, right? Like, yes, this is a cost, but does the benefit outweigh it? For, like I said, a couple thousand customers it does, for others it doesn't. But it's really about understanding the levers in the business that you can be pulling.
Yeah, that's an old school concept from Wall Street. Like, money now is worth more than money later.
Right. Well, especially as just competitive marketplace. So if you can turn inventory at a given profit level, 10 times before you have to ditch it instead of 8 times before you have to ditch it because of the debt cycle that we talked about, then maybe that means a couple, tens of thousands of dollars more in your pocket at the end of the year. And you pay 2% for that all day. So again, I don't want to paint too broad a brush, but it's at least I'm super biased here, but I think it's worth considering.
So just real quick, so I understand, and everyone understands what Payability does, is essentially what your team is doing, or what your software or technology stack is doing, is you're taking the settlement that Amazon waits to pay you and essentially pays you sooner on that settlement.
Yeah, that's exactly right. So the way what we say, you sell today and you get paid tomorrow, and then Amazon pays us in their normal 14-day settlement period. So we get you your money today, Amazon pays us in 2 weeks. And we do a fair amount of underwriting and making sure, that the folks that we work with are creditworthy, and that, they have good Amazon health stats and all that stuff. And that's kind of the secret sauce of the business. But in a nutshell, yeah, that's what we do. We get you paid tomorrow.
Cool. That's awesome. And then they can take that money and redeploy it back into their business. So if you're getting people paid sooner, and they have let's just say they're waiting 2 weeks for money, 2 weeks for their money, and you look at that on an annual period, that's a significant amount of days that you have to wait for dollars that you have to then reinvest in your business. Yeah?
Yeah, exactly. So what some of our most successful customers do is they say, okay, typically I turn my inventory, every 30 days, and with Payability, I'm able to turn my inventory every 20 days or every 25 days or something, right? So they're able to shorten these cycles, and in aggregate, that can mean a lot of real dollars at the end of the year, even though you might be sacrificing some margin, again, by paying a fee for that service. So yeah, that's how it works. But we try to stay away from telling you exactly how to use your cash, because our clients are very creative. Some people call their suppliers and say, hey, I'll pay you today instead of 30 days from now. Will you give me 10% discount? And sometimes they say, yes, that's great. You pay 2% to save 10 all day, right? Some people want cash in their pocket because they're, very active in the retail arbitrage space, and they see a deal they want to spend, they want to, replenish their inventory. So use cases really vary, but the concept, yeah, you nailed it.
Yeah, no, I like that idea of essentially getting paid ahead, paying down your suppliers in advance, saving, and you're essentially arbitraging. You're trading the difference. You're making 8% on that money. You're using leverage in your favor.
Yeah, exactly. That's exactly how it works.
Cool. That's awesome. Anything else you want to cover on this slide?
We're on the 80-20 slide. Is that right?
No, getting ahead of it.
Oh, my mistake. Yeah, I have a black screen on my webinar jam, but that could be my fault. Yeah, I guess you're right. I was just kind of giving the Payability pitch. There's the only other thing on the getting ahead of it thing is that you can run out of cash for a bunch of different reasons, and I think that people often think of cash crunches as a result of things going wrong, but just like we talked about in the Prime Day example, you can also have a cash crunch for things going right, because cash doesn't turn into inventory right away. It usually takes 30 days or 45 days or something. So if you sell out of all your inventory and you have all this cash and then you go spend it with a supplier, you could be sitting there with no inventory on the shelves and no cash on hand and a bunch of stuff on a boat. And that's a function of doing really well and selling a lot of stuff. So I guess my point is you need to be ready for cash management in good times and in bad. And all these ways to mitigate it on this slide are things that we hear our customers do, but don't need to belabor the point, I guess.
Cool. All right, so first of all, I want to lead into questions. If people have questions for myself or for Kevin, I want you to please flow them into the chat box. So there is a question coming in from Kevin. I think that's how you pronounce his name. What if we were in a country not supported by Amazon? However, use Payability for our bank account. Can we still use the half-day disbursements?
So let me unpack that. So if you're in a country not supported by Amazon, so are you selling on Amazon.com or you're not using Amazon at all? Like, is this a can I use Payability for my bank account question? Or let me just explain how Payability works. We ingest your prior sales data using technology, and we take a look and say, this is how much you've sold on Amazon.com. Unfortunately, right now, we only support Amazon.com sellers. And we say, okay, based on your sales, we think that you're eligible for daily payouts because we believe that you're a good seller and you should be able to do this. So that's the customer base that we're dealing with. So if you're in a country not supported by Amazon, I suppose you could be there and selling on Amazon.com. We are able to work with folks who are citizens overseas or living overseas and selling on Amazon.com. Right now, from our underwriting perspective, that list is pretty short. It's UK, some of Western Europe, and Canada. And again, you have to be selling on Amazon.com because our technology plugs into .com right now. So I hope that helps. Other Kevin, let me know if you have any other questions on that. Or you can email me, kevinw@payability.com if you have any specific questions.
Yeah, we'll share your contact details right at the end. So we are coming up sort of on the 2 hookups that we have for those that joined us this far into the webinar. The first one, Kevin?
Yeah, cool. So yeah, we have a hookup for you. So as Chad mentioned, we've set up a URL here for folks who want to try out Payability and want to learn more and potentially sign up. If you sign up through this link, so go.payability.com/Skubana, we'll give you an extra $100 in your Payability account when you get started. So basically what that means is on your first disbursement, which could be tomorrow, if you sign up today, you'll have an extra $100 in there. So
is turnaround time that quick? I'm just curious.
Yeah, so we do. I think we have a 4 p.m. Eastern cutoff, I want to say, because of our banking partner, because money tends to not move quickly overnight. But yeah, if you apply and get through underwriting, which tends to be pretty quick, if you have good health account stats, you can be up and running in 1 day.
Cool, that's awesome. For me, I wanted to offer people. So we're running a workshop in New York for a lot of large sellers are joining us. It's called Accelerate. And so I wanted to offer those and extend a discount code for those that joined. It's on November 2nd in New York City. We'll have 5 different speakers, and it's going to be extremely tactical. So we're talking about conversion rates, optimizing your listings, understanding how to acquire more traffic on Amazon. We're also covering Facebook, which I'm really, really interested in. So we're flying out a guy from Facebook who runs a team at Facebook of very large people that are selling products on Amazon, a massive budget, and he's coming to talk about the top of the funnel, the tofu. So check out accelerate.skubana.com for more information. The promo code for those hip hop fans out there is CREAM. If you don't know the reference, check it out on Google, the hip hop reference CREAM. So we're making that available till end of day today. Feel free. And then, of course, we're open to Q&A. If anybody has questions, you can feel free. If you don't feel comfortable putting it in the chat box, feel free to hit us both up at these email addresses here, kevinw@payability.com and myself at info@skubana.com. Kevin, any parting words? Anything else you want to share with those that are listening?
Yeah, I mean, I guess, Chad, you guys are probably seeing this too, but winter is coming, man. I mean, we're heading into the fourth quarter, and everyone that we talk to wants to make a splash. So it's an opportunity, and it's also competitive out there. So make sure you have your house in order, make sure you have, you know, answers to these tough questions that Chad and I asked you today, because everything about your business will be under a microscope in Q4. It's just the nature of the business, but best of luck to everyone out there. It's an exciting time.
Hey, Kevin, we had another question come in, if you don't mind.
Yes.
Leanne?
Oh, I see.
What's the fee?
Cool. Yeah, hey, Leanne. So we charge 2% of your sales for that same day. I'm sorry, for next day payouts. So straightforward. We used to have a minimum fee. We did away with that because it was very confusing. It's a flat 2%. That's it.
Cool.
Oh, and Ryan got there you go. Ryan got your cash reference. Nice.
Nice. All right, guys, feel free to reach out to us. We're always available, open to any questions if you want to hit us after the webinar.
Thanks, Chad. I really appreciate it. Thanks for having me on.
Thank you, Kevin. Sorry about the technical difficulties. Glad to have you on speaker.
Yeah, no worries. Thanks for thinking on your feet there. Appreciate it.
All right. See ya.